With us now for more is Robert Dan Roces, the Group Chief Economist at SM Investment Corporation. So good to see you. Welcome to the show, Dan.
Hi, Kathy. Glad to be here. Good to see you again.
All right, so what do you make of the diverging market action the first quarter leading to the midterm poll when you compare that to 2019 and this year?
Okay, so the market divergence between the first quarter leading into the midterm elections in 2019 versus 2025 is clear and meaningful. So in early 2019, markets were moving cautiously because of heightened uncertainty. We had geopolitical tensions back then as well, and then you have mixed investor sentiment that was reflected in volatile foreign fund flows. No? So, like what the analyst that we showed earlier was saying, the US was only targeting China. No? But there were threats as well that the US will likely impose tariffs on other countries as well. Fast forward to the same period this year, the market seems to be more shifty and cautious, no? But there's some degree of certainty because at least what the US is saying is that they'll be targeting such and such country already. So it's clear which countries will be hit by the tariff impositions versus what was happening in 2019. No? And then add to that solid domestic economic fundamentals, we're seeing growth, which may be slower, but still within that 5% range. We have inflation going down. We have improved investor confidence.
Let's take a
Foreign
closer look at those forecasts because I know you've made some slight revisions to your forecast following the
right.
data dump that we've had on inflation, jobs, and GDP. Take a look at this screen here. All those numbers, what has changed and why did you change them?
Okay, so our revised forecasts align with scenarios that we have formulated. So it's not a cast in stone number. Well, we do have several scenarios. So far, from the data dump that we saw this week, we project GDP growth to be at 5.9%, inflation at 2.3%, unemployment 4.5%. We've trimmed our inflation forecast from an earlier estimate of around 2.8 to 3%, following the recent CPI data that showed clear moderation, particularly in food prices. GDP forecast was slightly adjusted downward by zero point 0.2 percentage points. We had to consider first quarter's temporary supply chain disruptions, which we saw in the numbers already. And we anticipate that resolving by only by the third quarter, if at all. So these forecasts reinforce actually the Philippines' position still as a leading ASEAN economy amid a challenging global backdrop.
Got that, the silver lining as well in the numbers. Thank you, Dan Roces of SM Investments Corporation joining us.